Jim Jessup, income strategist with Virtus ETFs, and I'm joined by Dave Albright, president and CIO of Newfleet Asset Management. Dave, how are you today?
Good, Jim. Thanks for having me.
Could you talk a little bit about where we are currently in the securitized marketplace and more broadly, what it represents?
Sure. Well, first of all, we've been investing in securitized for over 30 years. Very recently, securitized became what we thought was extremely attractive, not only in asset backs, but non-agency mortgage backs and also commercial mortgage securities. You were able to stay up in quality, so not take a lot of risk, get very attractive yields. All-in yields were anywhere from 6 to 8%. We saw dollar prices that were in the 90s, so extremely attractive on a total return setup basis if you look for forward future returns. And we were able to allocate accordingly. Now, VABS allows you to get access to those sectors, especially to the out-of-index securities that are very difficult to purchase unless you have expertise like we have in-house.
And you mentioned VABS, ticker VABS. Could you talk a little bit about the Virtus Newfleet ABS MBS ETF?
Sure. It's a vehicle that we use to get diversification within securitized. Specifically in the asset backs, our big overweights are subprime auto and also whole business securitizations. As I had mentioned, we stay up in the capital stack, not taking a lot of risk, but getting very attractive all-in yields and discount dollar prices. In the non-agency space, we've been investing there for almost 3 decades. They're not government guaranteed. This year, we did have an opportunity to go into the agency mortgage backs, which for the first time were wide as 200 over, which is a spread we haven't seen in quite some time. So we were able to add exposure there and keep our core positions in the non-agency space. Non-agency is characterized by great underwriting. Demand dramatically outweighs supply. If we went back to 2007, they were building 1 million houses a year. 2009 and after, they're only building 250,000. So for the last 14 years, about 700,000 houses short in demand. So far exceeded the supply. And that's a good dynamic. That's why we didn't see the major fall off in valuations. On the commercial mortgage front, single asset, single borrower deals is something we pride ourselves on, specifically rural office, data centers, and industrial warehouses. And then some individual property deals like the Willis Tower or Bellagio. But very attractive, front part of the curve, staying up in quality, not taking a lot of risk, and it provides great liquidity for the portfolio.
So essentially the ETF VABS offers access to a core competency for you and your team from a fundamental research and credit management standpoint in the efficiency of an ETF wrapper.
Exactly, and something, as mentioned, we've done for nearly 3 decades.
Great, thanks for your time, Dave.
Thanks, Jim.